Our stocks go, it's the most popular traded one on our end. They're expected to release their figures on the 24th of this month, and that means we're going to be taking a look and doing an earnings preview. Hello everyone, Monty here, market analyst at IG. Let's go ahead and get started because there's quite a bit to cover. It has been a very eventful quarter. You had the Cybertruck release, who could forget that? You had the Model 3 refresh, you had price cuts again. In fact, they've actually extended into this quarter as well. Troubles in Scandinavia, though, didn't really dent sales there. You had the charging and energy growth, or I should say ongoing growth in that in terms of adaptation. You had the recent Hertz shift, though, and rising labor costs. So the last two, that's sort of news that's come over the past couple of weeks that has taken a hit towards its share price. One key item that stood out, of course, for the quarter is you had rival lower cost Chinese car maker BYD's overtake, although Elon Musk has said that this isn't an apples to apples comparison in the sense that we shouldn't be looking at Tesla as a car company, rather as an AI or robotics company. But here's the thing, that a lot of times when it comes to growth, or when you're looking at a growth stock, people want to look at something that's going to signify growth. And we're not just talking about earnings or revenue, which we will get to, but a lot of times they're looking at some sort of growth in whatever it is that they're producing, which in this case, just because of the fact that we're looking at electric vehicles, a lot of times the focus essentially is going to be on production and delivery, which, by the way, were a record for the quarter. Yes, BYD did manage to beat them for the quarter, but not for the year. They did manage to produce more than 1.8 million, by the way, for 2023, which was above their later guidance. Initially, it was supposed to be 2 million. They revised it lower to 1.8, and they managed to actually breach that for the quarter. What are some of the updates, though, that investors are going to be looking forward? It's going to be the low-cost model, given all that's been happening, 2024 guidance, geographic expansion, and supply chain woes after the latest geopolitical tensions that has been seen as a factor in terms of their production in Germany, as well as how they're going to keep up on the growth front without having to cut prices too much, or whether their strategy is going to be to continue to reduce prices, because that obviously is going to dent margins, given the fact that we're expecting an erosion of subsidies and government incentives this year when it comes to electric vehicle purchases. What about when it comes to earnings? The expectation is earnings per share reading, courtesy of Refinitiv, 74 cents for the fourth quarter. I've put some of the figures from before, but year on year for the fourth quarter, it's actually expected to drop. So from $1.19 for the fourth quarter of 2022 to 74 cents for the fourth quarter of 2023. In fact, if you look at the remaining Magnificent Seven, by the way, Apple, Amazon, Alphabet, Microsoft, Meta, Nvidia, and Tesla, it's only Tesla that's not going to have year on year growth for the fourth quarter when it comes to earnings per share, but not when it comes to revenue yet. Uptick when it comes to production, the expectation is no revenue is actually going to grow. It's going to breach $25.5 billion. But the thing is that because you had price cuts, and there are going to be more price cuts already starting in this quarter, and the expectation is we're going to see it this year, when it comes to margins, the gross profit is going to be within the 18% handle from what was under 18% for the third quarter of 2023. And now, of course, it would be a nice surprise if they can manage to get it back into the 20% plus handle. But for the time being, given what's expected and given what's occurred, those 20 to 29% days where they used to provide those kind of margins, or I should say 20 to 29% quarters, are behind us for the time being. And when it comes to analyst recommendations, by the way, it's still slight to the buy side. You got 5 strong buy, 12 buy, 19 holding, 4 sell, and 4 strong sell. Again, figures courtesy of Refinitiv, with an average price target, by the way, of 229, which at the start of last week was below its current share price, but currently it's now above it after the latest hit that it's taken. What about clients on our end? They're holding an extreme buy-buys. They have a tendency to hold majority buy-buys in Tesla. I'm going to plot this onto the chart. Day on day, it's risen from extreme buy 79% to 80%, week on week from 77 to 80. So if you factor in, because last week it took a hit in terms of price, so you had some of those longs initiating. So what I'm going to do now is I'm going to plot it onto the chart. This is Tesla's share price weekly chart, and we're going to go ahead and take and plot IG client sentiment onto it. That's the blue dotted line as percent long, corresponding to the left side of the axis. So when you see it over here, for example, at 77%, that was back in March. You see that price was around $170, to give us an idea of where traders were and how they positioned themselves accordingly. Now, I went through in the third quarter earnings preview, went through the previous history. Let's just take it up and continue from what happened afterwards. You had that big drop over here. You saw immediately shorts getting out, longs initiating, and taking it up into extreme buy territory. Since then, we had this period where we were working within a controlled bull channel. In fact, the technical overview at the time was a bull average. You had prices, the channel was essentially holding for the time being, and what you saw were longs slowly start to get out, especially when it reached the top over here, getting out, and essentially a portion trying to trade this channel. And then of course came the start of the year, and you had these 2 weeks where it dropped, and that has taken it back up into extreme buy territory. So that's how they got to where they are right now, essentially positioning or hoping for further price gains, and essentially that these price drops will hopefully come to an end. Now, from a technical standpoint, and I know that this is a fundamental event, so a lot of times technicals are shelved. I mean, if the numbers come up, worse than expected, if the earnings call is very disappointing, you're going to see some big moves, and these technical levels aren't going to hold because market makers are going to get out, and especially depending on where prices are when the event occurs. So for example, if current share price or the current opens around $219, if it's around 230 by the time this event comes around, you bet these levels aren't going to be able to hold, because if it's good news, for example, if it's at 230 and good news comes out, it's going to spike. If it's at 207 and bad news come out, it's going to most likely it's going to break beneath and size it, and significantly so, I must say, because we've had mostly controlled quarters. I'm going to bring up the chart in just a moment, but mostly we've had controlled quarters. So a cautious consolidation overview from what was bull average, by the way, and on a shorter term daily time frame, you've had a lot of key technical indicators turning negative, turning red. So there's no denying the recent negative technical bias. I will pull up the chart in a moment to show you guys what I mean by that. But in terms of trading some of these levels, if indeed we are closer to the middle, you don't want to just go ahead and fade these moves. Definitely don't want to do that. Even if it's part of the conformist camp, you want to only do so after a significant reversal, and others going with significant caution. And because this is an earnings event, usually a lot of traders will say, okay, I'll be cautious on the first level, but when it comes to a second level on a weekly time frame, this is a weekly time frame, not a daily time frame, but on a second level, I'm not going to be as cautious. I'll go in with a fade. But if the event is close to one of these levels, and then you have the release and it kicks it up to the next level, you still want to approach the second level with caution, because the fact that you could get moves well beyond these levels depending on how results veer from expectations. I'm going to go ahead and pull up IG's trading platform and show you guys what I mean. This is one of the more difficult or trickier technical situations because of the fact that you have a lot of the key technical indicators huddled close to each other. So you've got price indicator proximity with the key moving averages over here. You got the 250 and the 100, but also indicator to indicator. And this is the 250 and 100 week moving averages, because we're on the weekly time frame here, so not the daily. Although the price has gone beneath all its key daily moving averages. You look down over here, directional moving index, again, positive and negative DMI, both of them closely huddled next to each other. We did have a negative DMI cross, but of less significance because of the fact that they're so close to each other. You got an ADX that's well out of trending territory, and RSI pretty much, there isn't much of a signal when it comes to these things. And you look at the Bollinger Bands, even they've pretty much gotten very narrow because of these relatively range bound and relatively controlled moves ever since we got there. I mean, you had the earnings release, boom, you had big moves, and then things sort of got very calm afterwards. And that's essentially what we're dealing with, which is why it's a very, very cautious approach. You don't want to fade moves going into this. You want to take it either go for a reversal, but ideally a very significant reversal, and maybe waiting until they reach potentially second levels on the weekly time frame. So that's about it from our end. I want to thank you guys so much for watching. Good luck out there, and as always, happy ticks.